Greetings and welcome to our review of the big economic stories for the first quarter of 2022. Inflation was the top economic story of the quarter, as already strong levels of inflation were pushed even higher by the Russian invasion of Ukraine. The U.S. inflation rate hit 8.5% as measured by the U.S. Consumer Price Index. That's the highest level seen since 1981. The invasion had an immediate impact on the prices of many raw materials, including oil, wheat, and nickel. But other items that the index tracks did not rise as much as previous months, which gave economists hope that we may be turning a corner. The employment picture, by contrast, continues to improve. The unemployment rate in March was 3.6%, and that means we're now back down to pre-pandemic levels. But as the chart shows, the current job situation is now quite different from 2020. There are now nearly twice as many job openings in the U.S. as there were before the pandemic, so the employment picture still has room to improve, particularly for employers. In an effort to combat inflation, the Federal Reserve raised its Fed funds interest rate in March by 0.25%. That's the first such increase by the Fed since 2018. Now, other types of interest rates have been moving upward for several months already. As you can see in this chart, the average 30-year mortgage rate was just below 3% in August, but it's now at 5%. It's the highest average rate seen since 2011. That's the fastest increase seen since 1987. Low rates made 2021 a banner year for new mortgages, but we will have to see what the impact of these higher rates have on home sales in 2022. Let's finish off with an understanding of why the government and the Federal Reserve are now taking inflation quite seriously and doing things like raising interest rates and releasing large amounts of oil from the strategic reserve. And that's because as inflation seeps into consumer psyche, it leads to behaviors that can lead to more inflation. It's called the inflationary cycle, and it typically starts when there's a sudden shortage of one or more basic commodities, much like we've seen with wheat and oil due to the Ukraine situation globally. That leads to higher prices of essential items like gas and bread. The higher prices make consumers feel poorer, so they begin demanding higher wages, and they get concerned that prices will continue to go higher, so they accelerate purchases of big ticket items and then stock up on other items. Businesses, seeing the increased demand, but also seeing their cost of doing business increase, figure that it's a good time to raise their prices. Now, suddenly, all sorts of items besides gas and bread have gone up in price, and it makes consumers feel even poorer. And thus, the inflationary cycle expands. And it's this situation that the folks in Washington are now working to diffuse. So that's your economic review for the first quarter of 2022. Remember, if you have any questions or concerns about your economic situation, you can always reach out to your Boulay financial advisor. Thank you, and until next quarter, do good and be well.